Let's talk about business plans in the real estate world. When you are investing passively in something, the operators of that deal or the capital allocators are going to present you with a packet of information that's basically the business plan of the investment, right? So it's going to lay out some key points for you to figure out if this is something you want to invest in. Now, it is very, very common to get wrapped up in the numbers in these plans. It can be very exciting to see that they're going to have returns of 12 to 20% or whatever it might be. And we get excited about that. And sometimes when we're comparing business plans, we're looking just at those numbers. Oh, this one's 1% higher than this one. Don't do that. Those are projections, okay? If everything goes according to plan, that's what they're going to hit. But a far more important thing is, how likely are they to actually hit those projections? So you got to look past the numbers. Look at what market it is in. Look at the employers in that area. Are they stable? Are they going to continue to provide employment in that area? That's important because that's the tenants to your property. I'm thinking mainly in terms of apartment complexes right now because it's one of the most common investments of this sort. So when you're looking at the business plan, you want to look at those things. But one of the things not to forget about is your personal goals. Why are you investing? Is it to grow your wealth? Is it for cash flow? Is it because your child's going to college in 3 years? Is it because you're going to be retiring in 15 years? Or is it because you want to leave your work early and you want to get out of your day-to-day grind in 5 years from now? That timeline is really important to understand. The timeline and what your overall goals are. Because when you look at that business plan, it's going to give you projections of the timeline of the hold period and how long they'll hold your money, how long they're going to hold the property, as well as how long they're going to hold your money. So if you have kids going to college in 3 years and that business plan is a 5 years to refinance and get you your money out and then hold for another 5 years for a total of 10 years, is that going to work for you? Might not, right? So you might need to look for something that's going to have a shorter hold period. Now, if you're investing for retirement in 15 years, that might be great. You get your money back in 5 years, you can go put that into another deal. Now you got 2 deals going at the same time. And at the end, you're going to have this massive equity, right, in that retirement account, especially if you're investing inside your retirement account. That's something else to think about. But right now, we're going to focus on the business plan. So you want to look at what the overall timeline is. You want to look at the cash flow projections, okay? If you're investing for cash flow, but they're doing a big renovation, they're probably not going to be giving distributions at first, right? Because they're putting money into the deal. It doesn't make sense to put money into the deal and take money out at the same time. Then you just have to raise more capital and then it's less money for everybody, right? Because there are more shares being sold. So you want to think about, if you need cash flow, you probably want to invest in a property that's maybe more stabilized. Maybe it's in a second or tertiary market where you get a better purchase price, so you cash flow more from the very beginning. Because most real estate deals, they get stronger with time, right? As the property appreciates and rents go up, that's where you start making more and more money the longer you hold. But if you need cash flow right now, maybe you need to invest somewhere where the purchase prices are lower and you can just cash flow from the get-go, but then they're probably going to stay rather similar from what it is that purchase price to the exit, right? It's a different investment. But make sure you understand why you're investing, what your timeline is, and then evaluate the business plan according to that and see what the likelihood of that business plan actually being executed. You can even ask for the underwriting of all the assumptions underneath it, see if they're being too aggressive. Maybe they're not being aggressive enough. Maybe they're going to surpass those projections. So there are lots of things to look at. You can even check things like, what are their estimates of what insurance in that area? Maybe you're an insurance agent and you know that they're undervaluating what that insurance is going to be, or maybe they've projected more than it's going to be. Same with taxes, things like that. If you need help with any of that, that's what I do for a living. I underwrite properties. This is what I do all day long, is I evaluate properties, I look at business plans, and then I make those available to the people in my investor club. So happy to help you with those, but if you're doing it on your own, those are some key points to look at in the business plan and make sure they align with your personal goals.